26 years of CNBC-TV18.
Welcome back. Market's a little bit lower, but it's a good time to welcome our next guest, Pirojsha Godrej, Executive Vice Chairman, Godrej Industries, who joins in. Hi, Pirojsha. Good morning. Thanks a lot for joining in to celebrate our 26th birthday. Appreciate it.
Good morning, Nigel. Great to be with you, and congratulations to you and all your colleagues on this milestone.
All right, Pirojsha, we've got a few questions for you, but just to run through a few discussion points, that we're going to be focusing on properties. We're going to be focusing on which stage of the cycle we are at, the project pipeline, project funding as well. We'll also discuss the consumer business, demand outlook, commentary with regard to competition, and scaling up the acquisitions. Pirojsha, let's start with the real estate piece first. How's demand on ground? Are you seeing enough traction? The stocks, all real estate stocks have come off quite a large extent from the top. But on ground, how is demand? Is it still strong enough? And also, if you could give us a sense in terms of your analysis, which part of the cycle are we in for the real estate sector?
Yeah, I think, demand in the sector has actually been very robust for the last few years. We've seen Godrej Properties, for example, a compounded growth rate over these 3 years of over 50%. And we continue to see good traction in the current year. Even last quarter, our booking value growth was in excess of 60%. And I think there's a very strong outlook likely for the second half of the financial year as well. From where we are in the cycle perspective, Nigel, it's hard to be very certain, but my sense is that a typical real estate cycle in India has usually lasted between 7 and 9 years each end of the cycle. And I think this cycle upswing started around early 2021. So we probably are at the mid stage of the cycle, and I expect positive momentum to continue until at least 2028 or 2029.
Pirojsha, hi, this is Rima here. Nigel, CNBC is carrying a legacy of 26 years. But here is the Godrej Group carrying a legacy of more than 125 years.
Wow.
Built on trust, innovation, and just staying relevant. So it's apt that on a day like today, Pirojsha, you are joining us. So thank you very much for being here with us. So just continuing with, real estate and the momentum that we're seeing, up until now, growth for you was driven by, Mumbai, Bangalore, the NCR region. But now you're also expanding outside into newer cities, like you've got land parcels in Kolkata, Ahmedabad, Indore. So as you look ahead, say 5 years down the line, what would your revenues look like from the current 5,000 crore rupees? And what will be the contribution of newer markets? Can you give us a big picture and some guidance long term?
Thanks for your kind words, firstly, Rima. Look, I think the company is all set to scale very rapidly in the years ahead. If you look at how the accounting in the industry works, you're accounting for projects only for most developers, accounting for projects only once they are completed. So we have seen, as I mentioned, a 50% plus CAGR in our booking value, which will translate into our accounting revenue over these next few years. So while you rightly said our accounting revenue is only about 5,000 crore last year, our booking value last year is about 30,000 crore. So you should expect Godrej Properties reported revenues over the next few years to get to those kind of levels. And from this high base, we still believe there is a huge opportunity to continue to compound at, say, 20% a year. Because if you look at it, while Godrej Properties was the largest developer in the country by sales value over the last couple of years, we estimate our market share at only about 4.5% or so. So we think there is a huge opportunity to both participate in market-led growth, but also to continue to gain market share. We've almost doubled our market share in the industry over the last 4 or 5 years, and the goal will be to continue to gain market share. So I certainly think the opportunity before the company is a very large one, and we can certainly hope to see a very significant increase in numbers. And a lot of that has already been locked in through operations that will reflect in the P&L as these projects are completed.
All right, Pirojsha, let's turn our attention into the consumption space. Since you're talking about, market share, what about in the consumer space? What kind of market share do you look at? How's the competitive intensity as well out there? Help us out with some guidance on that front.
Well, it's interesting. I think there is something to the kind of K-shaped recovery that a lot of people have talked about post the pandemic in India. We've certainly seen higher income asset classes like real estate performing very well. There has, as you know, been a bit of pressure on demand in the FMCG space, but I think we're quite excited about the steps the company has put in place and about the overall FMCG opportunity long term, which continues to remain robust. So I think in the short term, we're focused on establishing category leadership in all of the markets that we're present in consumers. So for example, we're already today the leading player in household insecticides, in air care, in hair colors. We have a strong number 2 position in soaps. So the goal there will be, again, to, in all our existing categories, establish leadership positions. We also want to ensure that we're increasing our total addressable market on a consistent basis. Sudhir, the CEO, has worked on a plan to look at what we expect FMCG in India to look like in 2040, basis how the categories have grown in other developing countries, and have kind of backcasted from there to see what are the categories that we as a business should be in. And have taken several strategic steps to make sure we are addressing those. So, for example, we expect perfumes and deodorants to be one of the largest segments within FMCG in 2040, which it isn't today. We've tried to address that by establishing a strong position through acquiring Raymond's FMCG business, which has a large perfumes and deodorant play. Similarly, we expect pet food to be a huge opportunity. Pet care, if you look at globally, is a huge market. Somewhere like China now, it's been quite crazy to see the growth in the number of pets. You've had statistics cited that there are now more pets in China than children under a certain age.
Yes.
I think this is a huge opportunity. Here we've entered organically through a brand called Ninja, which is in its very early days, but something we're extremely excited about. Similarly, if you look at home care, we've entered through Fab, the liquid care market, and that's been one of the fastest growing products in any FMCG category. So I think this combination of focusing on the core, trying to establish leadership positions in all our existing categories, while making sure we're laying down the bets for the future categories, is how we're approaching the business.
Pirojsha, are you still on the prowl? That male grooming business is what you bought. Any more inorganic growth should we be looking forward to?
Well, I think we have a clear preference for organic growth. I think that's where we think, most value can get created. But where we see exciting opportunities, we're certainly on the prowl, as you put it. Mustak, for example, we thought it was a great business, relatively small in scale, but already very profitable. I think the team there has done a fantastic job using influencer marketing and things like that to ensure the brand has scaled quite rapidly entirely online. We hope to now take it offline as well as learn some of their tricks on their online marketing capability.
Pirojsha, it's always a pleasure having you on the show. Thanks a lot for joining in, celebrating this big day with CNBC-TV18, and thanks for supporting us over the last few years, and looking forward to your support over the next few. Have a great day ahead, and we catch up soon.
Great to be with you. All the best.